Thank you for joining me today. It's Brian Gubernick, and welcome to the No Days Off podcast, where we believe that every single day brings a new opportunity to get better. Today, I want to talk about wealth, and I want to do so by talking about one of my good friends, Warren Buffett, and his take on investment and a handful of other things over the years. Now, Warren, of course, is not my good friend. However, there are so many things produced about Buffett in terms of books and podcasts and different things we could study, as well as so many things that Warren himself has written, that if you spend enough time studying it, you feel, to some extent, you at least get to know the financial portion of his mind. And so recently, I took some time to review a number of Warren Buffett's letters that he puts out to shareholders of Berkshire Hathaway every single year and has been doing it for, 50 or 60 years. You have access to these letters, by the way, if you did not know. Just go to the Berkshire Hathaway website or just Google Berkshire Hathaway shareholder letters, and you will find every letter that Warren has written to his investors for the past 50 or 60 years. So you don't have to be an investor. You don't have to own stock in Berkshire Hathaway to get access to it. It's right at your fingertips. And in those letters, Warren writes 3, 4, 5, 6, 7 pages worth of detail around what's going on with the company, and more importantly, what he believes is going on with the economy and the business decisions, the acquisitions, the things that Berkshire Hathaway has done or is considering or moves it didn't make based on what he was observing. There is so much knowledge to be gained just by reading these letters. So I went back through several years just to get a glimpse into how Warren was thinking. And it proved to be a really, really beneficial exercise. And what I want to share with you are 5 lessons that I pulled from the letters. Things that I saw show up time and time again, some themes, some strategies that, going back decades, Warren was already leveraging and still is utilizing them here today. The first thing that I see throughout is Warren's fundamental lesson around the importance of value investing. Warren constantly emphasizes the value investing concept, which is buying businesses or buying stocks that are undervalued compared to their intrinsic worth. One of Warren's mentors, who he references in almost every letter, is Benjamin Graham. And Benjamin Graham once said, "Price is what you pay, value is what you get." And Benjamin Graham advocates for long-term investment and has had a massive influence on Warren, who also, of course, is an advocate for a long-term investment horizon. Now, value investing, an example of a value investment made by Warren Buffett and Berkshire Hathaway, I think probably its most famous value investment is the company's acquisition of shares in Coca-Cola. Warren began buying shares of Coca-Cola in the late 80s and has since become one of the most successful and well-known investments held by Berkshire Hathaway. So in the late 80s, Coca-Cola was already a well-established and iconic brand, and it was recognized globally for its soda products. However, the company had faced some challenges, including different changes in consumer preferences and increased competition and things of that nature. And so Warren saw that the company had some challenges. As a result, saw the market react to it by undervaluing it. And Warren seized the opportunity because he believed that Coca-Cola would make it through all of the challenging times. It would endure, and its popularity would start to rise. He thought that the company had a significant economic moat and had significant long-term potential, and so he invested in it. From a long-term perspective, Buffett's investment in Coca-Cola has paid off quite nicely. He had no intention, just to be clear, of making a quick profit. It was always his expectation of holding it for the long term. So the stock price in Coca-Cola since the late 80s has skyrocketed. And Berkshire Hathaway has purchased even more shares. And the shares pay dividends. And so he's got a steady income stream. This is value investing. And again, in Warren's letters, he talks nonstop about value investing. Now, the next thing he talks about all of the time is the concept of economic moats. What economic moats happen to be are competitive advantages that protect the company's market position, protects its profitability. So Warren advises investing in companies that have strong and sustainable moats, that have strong brand recognition, that have cost advantages, that have network effects. This is one reason why a company that Warren's taken a big share in, not too long ago actually, but Apple. Apple is a great company in terms of example of economic moat, competitive advantage in terms of profitability and market position, and cost advantages and network effects. So economic moats are critical in terms of wealth creation. And you see it throughout Warren's letters. Now, the next thing I saw a lot of in Warren's letters was quality over quantity. Quality over quantity. Warren is a proponent of concentrated investment. In other words, he kind of advises against significant diversification. He really, really encourages investors to focus on a smaller number of high quality investments that they can get to thoroughly understand. Warren actually once said in his letters, diversification is a protection against ignorance. It makes little sense if you know what you are doing. So, there is a degree of diversification in Berkshire Hathaway's holdings. Let's make sure we're clear on that. But the extent to which Warren believes one should diversify is dramatically less than what many of the so-called experts would tell you. Instead, he believes in concentrated investment, getting to know specific sectors and going deeper in those areas. And if you are deeper and you have a deep understanding, well, you stay in that core focus. Next, you can't help but notice this theme everywhere, and I've already kind of alluded to it. In Buffett's letters, he's constantly talking about long-term perspective. He consistently stresses the importance of thinking long-term. He is so anti attempting to time the market and so anti short-term trading, and all he ever thinks about is the benefits of holding investments for years or even decades. And he points out that his favorite holding period, he's been quoted as saying, and he says in these letters, his favorite holding period is forever. Now, the last thing that I caught as a theme in many of Warren's letters, transparency and accountability. Warren places a super strong emphasis on transparency, both from the companies that he invests in, as well as from his company itself. He really values honest and straightforward communication from his management teams. And he holds them accountable for their actions. There are many stories of companies over the years that Buffett's owned that maybe made a bad decision or did something that had an adverse impact on the community or consumers. And Warren's guidance was always to be honest, truthful, earn trust back, be patient, be accountable for your actions. He believes highly in the importance of ethical behavior and integrity in business. And you see that again throughout all of his letters. So the lessons that I share from Warren's letters to his shareholders really reflect his core investment principles. And I think it provides really valuable guidance for investors like all of us here at No Days Off that are looking to follow in Warren's footsteps. I would strongly encourage you to, again, go look up these letters, spend some time, even read just the past few years and see what you learn. The shareholder meeting is held every May in Omaha, and the letter itself comes out, shortly thereafter. You might want to take a look at it whenever you have some time. That's all we have for you today. The No Days Off podcast. Thank you so much for listening. And remember, every single day brings a new opportunity to get better. So let's get after it.